Today is the 12th of January 2024, and I want to show you something interesting. Okay, so I want you to take a look at this wonderful gold price action. What you are seeing here is a 3.7 risk reward trade and a 3.27 risk reward trade. It looks very beautiful, right? Fine. I want to teach you how to execute this kind of trade so that it will look nothing new to you. This is a downtrend. Okay. So first of all, I am going to clean up this chart and remove the drawings and come back to explain the concepts to you. All right. So what do we have here? We have price going to the downside. Okay. We are in a downtrend. That is the first thing you need to find out in the market. Where is the trend going? So I'll pull up my trend tool line and mark all my lower highs. Okay. The trend is purely a downtrend. Is that fine? I hope it's fine. Good. Now, what else are you looking for when you identify the trend? When you identify the trend, you are basically trying to know where the market is going because we already have knowledge of where pro traders tell us that the trend is our friend. Okay, and we are not going to take that for granted when we are making our analysis. Now that we have identified our trend, let us look for where price is actually going to tap in before we enter for a sell signal. Okay, remember that in a downtrend, you are aiming to sell at the lower highs. That is where you are attempting to sell at the resistance level, which forms the lower highs. Now, the big question is, how do you know the next lower high, right? I am going to show you how to know the next lower high. First of all, you pull out your trend 2 line and mark out a break of structure that has a consecutive red candles on it. For example, this is a BOS, right? This is a break of structure that has consecutive red candles. The next thing that you will do is to look out for the order block. What is the order block? The order block is simply a Japanese candlestick that is in the market where price will touch before continuing in its intended direction. Okay, and in this case, our order block is mostly the last green candle before the formation of all these red consecutive candles. Before I point it out, let me let you uh, look for the order block. All right. Have you looked for the order block? All right. So this is our order block. I will take our rectangle tool and mark out this green Japanese candlestick here. So the high and the low is what I will take as my order block right here. Okay. This is my order block, the high and the low of this particular green candle right here. So I'm going to put order block. Okay. So that is basically your entry because you are waiting for price to mitigate all these places and come up to this high before it will sell. Okay. Now, this is our inducement. Remember that inducement is basically where price try to lure in traders so that they will think that the price is ready to go down before mitigating an order block and selling off quickly to the other side. So having seen this is our entry. Now, where will your take profit be? Your take profit will be the swing low that formed when price created this low. Okay, so where is the swing low? This is the swing low. So I'm going to take out my tool and mark out this swing low as my take profit target. So if we were to take this trade, this short position from here and place our stop loss on the next swing high, we are going to be taking our profit right here. No more, no less. All right, no more, no less.